Thank you for joining the Northern Miner at the annual PDAC convention in Toronto. Joining me now is Goliath Resources CEO, Roger Rosmus. Thanks for joining me.
Thanks so much for having me. Appreciate it.
Okay. Goliath Resources is active in British Columbia. Please tell me a little bit more about the company's asset and what's going for it.
Great question. Basically, it's a brand new grassroots discovery. Hadn't been drilled until we came along. We first drill program was in 2021. What was so appealing about this discovery is the fact that, number one, it hadn't been drilled before, hadn't been sampled before, and we literally have 2 kilometers of mineralization at surface that wrap around this mountain ridge with 700 meters of vertical relief. So even before we drilled this in 2021, we had a 3D model of it because we could see the mineralization. So fast forward to today, we've drilled just under 100,000 meters into the Surebet discovery in the Golden Triangle, and every hole's hit. We've got a 100% hit rate. The holes we drilled last year, we had a 92% had visible gold and or coarse grain visible gold, which is pretty incredible. And really the plan is to continue drilling the system. It does remain open. What it really is if folks can look at the Pogo mine as an example, it's a series of stacked veins within a mountain ridge. And then we have that over 1.2 kilometers vertically from the top of the mountain down. We're still actually above the valley floor, which is pretty interesting. And then recently this year, we have drilled into this intrusive related type of mineralization, which is carrying visible gold, bismuth, moly, similar to a, let's call it a snowline gold. Mind you, our grades here, snowline is kind of 1 to 2 grams. Deposit, I think about 7 million ounces, which is a fantastic project. We're getting kind of 10 grams, 10 meters, high grade, which is pretty interesting. So if you think about it, we've got a Pogo mine, essentially, potentially sitting on top of a kind of a snowline gold type of a system. So right now we've really only drilled the tip of the iceberg because again, we're still above the valley floor. All of this material here, as an example, hole 260, which was our best hole we drilled to date. This ran 39 meters over an ounce. So let's look at the ceiling here. It's pretty tall. Within that, we have over 4 ounces over 10 meters. Pretty incredible. So essentially a 1,300 gram meter hole, definitely up in the higher percentile of holes drilled, I'd say, worldwide over the last decade or so.
Yeah. That's very exciting stuff. So please tell me a little bit then about your current plans. How do you plan to further develop this discovery?
Sure. We're just going to continue to drill the system. We drilled 38,000 meters last year. This year, I would assume it's going to be a similar size program. Again, looking to do some 100 meter spacing to increase confidence level. Back of the envelope, with also focused on expanding the known horizons, because again, it does remain open in all directions. We do see it outcropping on the north slope of the mountain and the south slope where we haven't drilled yet. So just as an example, with the various, the updated model with the various widths and lengths, if you apply an average width of 5 to 6 meters, we're looking at potentially, not say it's all going to be economical, but potentially 40 to 50 million tons of material. So hypothetically, let's say if that runs between 5 to 6 grams gold equivalent, it's pretty easy to do the math, right? Yes. So yeah, I'd be very disappointed not to deliver up on this. Certainly the number I have in my head over the next year or two, that people could do back of the envelope calculation and come up with a very significant number.
So I just want to reference the Pogo deposit again. You've spoken about it several times now. What is the resource and status there?
Pogo's got about 10 million ounces, high grade. They've mined, I think, about 4.5 million ounces to date. So, and very similar mountain, using adits going in. Some of their veins are narrow down to 3 meters as well. But again, it's very high grade. We've got very high grade material as well.
Okay, so we've spoken a little bit about your current drilling plans. Just drilling down a little bit more into that, what are the specific catalysts that you are aiming to achieve this year?
We're looking to expand on our current shareholder register. Currently we have Crescat Capital as one of our larger shareholders. We've got Rob McEwen personally. We just signed a deal with McEwen Mining recently for them to take a toehold. We do have attracted a Singapore global-based commodity group. They're a significant shareholder, and as well Eric Sprott and Larry Childers. So we're looking to expand on that, maybe get some institutional ownership locally here in Toronto or in the US, which I think we've been seeing some of that traction. We traded 8 million shares last week between Thursday and Friday. Overall, in the last 52 weeks, we've traded over 106 million shares. And we only have 135 million out. So a lot of volume, VWAP of $1.36 on that. We did have a high a couple of weeks ago, but $2.84. Friday, we closed at $1.65.
All right, so investors are certainly sitting up and paying attention.
Yes, yeah. Well, we've got the volume. Obviously, volume begets volume. And then just the second part of the answer is, again, we're going to look to expand on the known horizons, doing this 100-meter spacing in certain areas, the high-grade zones where we're getting this, 39 meters of over an ounce type material, where we do see multiple holes that are 5 to 10 meters true width, pretty much, because we're basically nailing this thing perpendicular. It's lying somewhat flattish, all right? And then also find out what the heck is going on with this intrusive related mineralization that we're seeing, because these dikes actually run north-south against the veins that are kind of dipping down to the southwest. We have dated them, both rocks, and they're all around 50 to 55 million years of age. And so clearly this has something to do with, I guess, called the mother lode that brought all this mineralization to fill in the cracks up in the sedimentary group and in the contact and in the volcanics below.
All right, and are you fully cashed up for your plans this year?
Right now we've got $7 million in the till, and we've got another $9 million of warrants that are deep in the money. Average strike is 62 cents. They all expire this year, of which 6.5 million expire between now and call it mid-June. So we have seen some of that coming in, but I expect to see another 6.5 rolling in before June, and then the balance expires in December of 2025.
Okay, that's a good position to be in.
Yes.
Anything else important to note about the company or the asset?
Really, we've got a great asset. We've got excellent metallurgy as well. We've done some early met work. We're getting a 92.2% recovery of the gold at a 327 micron crush, so it's fairly coarse grain type of crush, so not a lot of power required, let's say in a mining scenario. And then within that, we're actually getting close to 50% of that is free gold just from the gravity alone. So you could pour doré bar on site. So no deleterious material, no cyanide required. Ultimately, half the gold is falling out of the host rock at this point. Just a little bit of crush, it's popping out.
All right, thank you very much. That was Roger Rosmus, CEO of Goliath Resources. Thanks for joining me.